Well, hello. Thank you for joining our session today. I'm sorry we're a bit late. We had some technical glitches. One of our presenters is also having some technical issues, but we'll be joining shortly. Today we have, well, for those who don't know me, my name is Jamal Khan. I'm a senior tax partner at Churchill Tax. I've got Hazel Johnson, who's our tax director, here with us. Hazel is a tax barrister. She's a tax specialist. Hazel will be talking about business asset disposal relief, which was formerly known as entrepreneurs relief, the new legislation, the new changes, what the opportunities are, what you need to watch out for. So it's a very, very important session today. Ahmad and his colleague Babar will be talking about research and development tax credits. Unfortunately, Babar is having issues with his. He's joining us now, but I think he's having issues with.
You hear me? Wait, I can't hear you. 1 second.
Okay, Babar, we're live, by the way. We're live on air. Okay. So, Hazel, do you want to make us start with your session regarding business disposal relief?
Okay. So, this is part of our monthly tax saving tips series about Churchill Tax Advisors. We're a specialist tax advisory firm based in London and Essex with national coverage, and we specialise in income, business and inheritance tax planning, tax investigations, HMRC dispute resolution and tax tribunals, Code of Practice 9, Code of Practice 8 and POCA investigations, VAT and stamp duty planning, inheritance tax and capital gains tax planning, R&D tax credits, which is going to form the second half of our talk today, UK and offshore trusts and tax planning and disclosure of undeclared income. And those are our Churchill Tax Advisors website. So I'm going to talk today about business asset disposal relief. And as Jamal said, so I'm going to talk about conditions, some planning, and the potential reform or abolition of the relief. So as Jamal said, business asset disposal relief is a successor to entrepreneurs relief. And before that, there was retirement relief. So there's always generally been a relief that says when you stop your trading business, you should be able to exit at slightly lower capital gains tax rates. They're always aimed at trading companies. So if you're a property investor, what we're talking about is property development, but not investment. There have been changes to the limits over time as the relief goes in and out of favour, and it's currently under a lot of pressure with suggestions that it's going to be reformed and or abolished. And the benefit at the moment is that you would get 10% rate on disposals versus 20%, which is the highest CGT rate currently. So business asset disposal relief applies to individuals, not to companies. For companies, they've got a different but similar relief, substantial shareholdings exemption. And it applies to a disposal of a business or part of a business, assets following a cessation of a trading business, and also shares in the company. And currently, there's £1 million lifetime allowance. So when we look at what is a trading business, there's traditionally a line drawn between what is a trading business and what is an investment business. Both of them are designed to generate a profit for people. And as I say, property development is considered a trade, but property investment isn't. And there's a whole series of case law called the badges of trade, which look at what is a trading business and what is not a trading business. So there's no statutory definition, but generally things like holding property, investing in stocks and shares isn't going to be a trade, whereas making things is a trade. Selling services would be a trade. Now, in the case of company shares, what we look at is the definition of a personal company, because when you dispose of shares in your personal company, you will be eligible for business asset disposal relief. You have to be an employee or an office holder of the company. You have to hold a minimum of 5% share capital, and that share capital has got to have 5% of the voting rights. And you have to have held the shares in the company for 2 years. When we're looking at a disposal of a business, so that's something that hasn't been incorporated, what we're looking at is a cessation of the business. So if you're, say, a plumber or something like that, you decide that you're going to give up being a plumber. You have to have been in business for 2 years, and there's a distinction drawn between disposing an asset that's used in the business or disposing of part of a business. So if you dispose of a machine that's used in your business, then that's going to be disposal of an asset. But if you dispose of, say, trading premises, if you're a fast food outlet and you have two trading premises and you sell one of them, that's going to be disposal of part of your business, because there's a whole lot more associated with it than just being an asset that can be used by other people. There's goodwill, and there's staff and all sorts of things like that associated with it. So it's a much bigger aspect. When we're looking at assets used in the business, you can get business asset disposal relief there as well. But the business has to cease again. The assets were in use at the time of the cessation. The business was owned for 2 years by the individual prior to cessation. The assets have got to be disposed of within 3 years of cessation, and the assets have not to be held as investments. So they've got to be used in the trade. So generally, business asset disposal relief has been used towards the end of somebody's sort of trading life. So it could be part of looking to pass on the business to your children. And you may decide that you want to pass on the assets of the business separately, or you want to pass on the whole of the business. And on the business asset disposal relief could apply to either way, depending on either way you choose to do it, depending on how you structure that kind of disposal. But you can also use it on the sale of a business or part of the business or your shares in a business. But it's also technically available when you're incorporating a business, because when you do that, you are disposing of your business. It's just that generally people don't claim it because you've got incorporation relief, which is more beneficial. But having said that, this is a relief that sort of fluctuates in value. Government have said that they would like the Office of Tax Simplification to examine capital gains tax and its future. And the Office of Tax Simplification came back with a report within the space of a month. So it looks like it was something they'd already been working on. And they had many ideas. Now, they won't necessarily be sort of passed into law or taken on board by the government, but they are looking at it. And one of the things that's being discussed is the possible increase of capital gains tax rates to be the same as income tax. But they're also looking at reliefs. And business asset disposal relief will be one of the ones that they have in mind to examine. There's been a recent reduction of relief. So historically, there was a £10 million lifetime limit at one point, but now this has been reduced to £1 million. And the way the lifetime limit works is you can claim business asset disposal relief on gains of up to £1 million. And if you make a disposal that's 500,000, then you've used up 500,000 of your lifetime limit, and you carry forward another 500,000 that you could use on a future disposal. And once you've used it, that's it. There's no more business asset disposal relief. And although it's impossible to sort of look to the future to see how things are going to pan out, bearing in mind the times we live in, traditionally, if rates go up, if capital gains tax rates go up to match income tax rates, then the reliefs available increase, so that although it looks like the tax rates have gone up, in general, the tax take stays about the same. Sometimes rates go down and then the reliefs decrease, so that, again, you end up in the position where the tax take stays about the same. What do we think is going to happen this time? Well, the Office of Tax Simplification report says that business asset relief distorts business decisions, which is not very encouraging. And there does seem to be a lot of pressure that business asset disposal relief and entrepreneurs relief is a relief that doesn't give you the benefits that it's purported to do, and makes people make economic decisions and structure their sort of disposals of businesses just to take advantage of the relief. So it is likely that this is something that's going to face more pressure and a tightening of the rules. Consequently, so business asset disposal relief is a useful relief in a lot of circumstances, but it has shrunk in value, because if we're talking about a £1 million lifetime limit and rates of between 10% on when the relief applies and 20% when it does not, your lifetime limit is worth about £100,000, which is worth having, but it's not as valuable as it once was. So if rates go up to 45% and you're claiming a 10% relief on 1 million, you're saving yourself 350,000. And broadly, if you had £10 million lifetime limit, we will be talking about £3.5 million worth of tax savings. So where we are going to end up in the future is hard to see. But certainly one thing that is worth thinking about at the moment is whether it's worthwhile triggering disposals now and banking the relief that you know you've got to make sure that you're going to get the advantage of business asset disposal relief whilst it's currently available.
Great, thank you, Hazel. If somebody's got any questions for Hazel, please do post them. I'll turn over to Imad and Barbara, who are our R&D specialists. And Imad, do you want to make a start, and then Barbara can give us some in-depth analysis and some recent examples of the cases that we've handled.
Thank you. Are you able to hear me fine?
Yeah, please speak up a little bit. You're just fine.
All right, sure. So I'll just start sharing screen. Just let me know when you're able to see it. Are you able to see the screen?
Yep, we can. Thank you.
Right. Thank you, Hazel. Thank you for the useful presentation. Myself and Baba will be talking about research and development. So I want to look at what counts as R&D. Essentially, R&D is any sort of project where you are doing it. There's an advance in science and technology. It does not. It shouldn't be as advanced in any type of social sciences. The project should be related to the company's trade. Or if the company hasn't started trading, it can relate to the future trade, which should also be linked to the research or R&D project that you are doing. Now, when you go through the R&D tax credit or claiming relief for that, there are certain things that you need to be able to explain. And I'll look into them in a bit more detail. The first one is you have to be able to show that there is an advance in the field. Now the advance should be it should be an advance not just for the business. It shouldn't be an existing technology. It should be an advance for the overall field. And there can be occasions that people have already developed what you are what you are trying to work out, but if it's not known or if it's not available publicly, then it will still count as an advance. You have to be able to show, and this links, the next part is being able to show that there is a certain challenge that you're facing, and it's linked with uncertainty, which I will also cover. And there are various ways that you can show that. One of them would be that it's not easy for someone who's an expert in the field to work out the advance. You could also show that there have been previous attempts at it, and that those attempts have failed. Because it's challenging, you would need professionals. If you have got professionals working on it, which would normally be the case, then that can count towards that as well. And it's always useful if you've got professionals who will be able to help you explain the difficulty. Now, talking about uncertainties, that's one of the most important things.
We've lost your volume. No, we've lost your volume for some reason.
Can you hear me now?
Yes.
I don't know how it was turned off. And the screen is not sharing as well, is it? Okay. Sorry, so how far did... So, sorry, I'll just start from here. Is this the last part that you... Was this the last slide?
That's
Okay.
fine. Yeah, just,
Sure. So one of the things that we talk about when we are trying to explain why it's an R&D project is showing the difficulty. So one of a few factors that can demonstrate that is that there are professionals and experts in the field who are not able to work out the advance, not easily able to work out the advance. You can also show that there have been previous attempts that have failed. You can also demonstrate that you've got professionals that are helping you on that, and get those professionals to help explain the difficulty. Now, one of the most important things with an R&D project is that the outcome is uncertain. So being able to explain that the uncertainty exists and the steps that you are taking to overcome them is important. And one of the ways that you can, a few ways of doing that is you can demonstrate that there are experts in the field who are uncertain about the outcome, and it shouldn't be something that is already known by the experts in the field. Now, how you demonstrate that you are trying to overcome the uncertainty is by demonstrating the research, the testing, the analysis, and work that has been carried out in relation to the project. And you can look at further things to explain these uncertainties as well. I'll pass over to Baba now.
Barbara, we can't hear you. No. Mind if you stop sharing? I'll see if I can get Barbara to log in again. Barbara, if you can log in again. Sorry, everybody. We tried. We seem to believe that we've completely mastered online technology, online presentation technology, but apparently not. It happens every time we come on. Somebody has a problem on their end. Hopefully, Bob will log back on, and hopefully things will be better. I do apologise for this. And Barbara has got some very good examples of R&D claims that we have made, and hopefully we should be able to share that with you. Right. In the meanwhile, if anybody's got any questions for Hazel, that would be useful whilst we wait for Barbara. One question I have, Hazel, is if somebody wants to check if they're eligible for business asset disposal relief because the company has some shares. Sorry, company has some savings or large cash reserves. Is that something you can help with to determine if the company qualifies for business asset disposal relief?
Yes, it is, and it's worth also sort of talking about that in the wider context that if a trading company is carrying large cash balances, that can also affect the availability of other reliefs. So you may be looking for business property relief for inheritance tax purposes. And if you have a large cash balance, that can affect whether business property relief is available, but also what rate it might be available at. Because you would still get 100% business property relief, but you'd only get it on a proportion of the value of the company. So we have a lot of experience in sort of analysing the accounts of a business to see whether it's going to qualify for those reliefs and suggest planning that will help them qualify. And hopefully we can now hear from my colleague.
Is that any better? Can you hear me now?
Oh, yeah.
Okay. Yes, we can hear you now.
Sorry about that. Gremlins in the system.
No worries. Sorry, just before you start, Barbara, just give me a second because we just started Q&A session for Hazel. Sure. And we've got another question that's coming. What changes do you think that the government may make to business asset disposal relief, and when?
I would hope that they're not going to make too drastic a change, bearing in mind they've already nibbled away at it and reduced the lifetime allowance this time round. They might tighten up the holding conditions, so they might make it 3 years, 4 years, 5 years. I don't see them abolishing it because it's been around for an awfully long time and it is a feature of the tax system, and people can talk theory all they like about how it distorts investment decisions, but nobody really cares about that, practically speaking. And I don't think they're going to make it in the first in sort of the first budget we get next year. I think that's the wrong time. Everybody's just going to be too busy trying to get back to some semblance of normal. So I think it's probably going to be a 12-month, 18-month timeline before we see what changes the government is going to have in mind for capital gains tax more broadly and business asset disposal relief in general, particular.
Thank you, Richard. I hope that answers the question. But the previous question we had, I think we are getting quite a few inquiries these days from accountants and private clients directly to check whether a company qualifies for business asset disposal relief or entrepreneurial relief as it was before. But it's important that assessment is completed before you think about selling or liquidating the business. Right, Barbara, over to you, sir.
Okay, so can everyone hear me fine?
Yep.
Just about, not as loud, but yeah, just about.
Okay, perfect. So I think I'll just follow on from what Imad was talking about. I think the very first thing I'd like to point out is that when it comes to research and development allowances, it's very much a subjective and qualitative approach that we have to take to these claims. Research and development allowances were previously called scientific research allowances, but I think the name change in itself illustrates that HMRC were trying to provide a more broader incentive for general innovation within the UK. And so the first question is, what are research and development allowances? And we'll take a statutory definition. It's considered any activities that fall to be treated as research and development in accordance with the generally accepted accounting principles, accounting practice and definitions. So again, that shows that there's a certain amount of interpretation that is required when making these claims. Now, people will often hear about tax incentives and tax schemes relating to capital gains tax and stamp duty and various other things. I think, again, it's very important to take note that a claim of research and development allowances is very much a statutory exemption. It's based on legislation, which is the Capital Allowances Act of 2001. So the Act is split into 9 or 10 different parts, some of which have been obsoleted, but it's parts 6, 7, and 8 that relate specifically to research and development allowances, know-how allowances, and patent allowances. These are the 3 main types of allowances you can claim in relation to research and development activities. So as Imad pointed out before, these allowances relate to expenditure on the development of new products, new processes, or new services. Or it can be the enhancement of existing products, processes, and services. Again, the key sort of overriding principle here is innovation. HMRC, the UK government, are trying to promote, promulgate, and encourage innovation within the UK economy. So the 3 types of allowances I mentioned: research and development allowances, know-how allowances, and patent allowances. Research and development allowances we're about to discuss in detail. Just to quickly touch upon the know-how allowances, they're related to the general acquisition of know-how and extra skills and information that an individual might undertake. And patent allowances relate to the acquiring of an acquisition of patents that might already be existing. So coming back to the research and development allowances, let's talk quickly about the conditions that you can see up on the screen there. So there's prerequisites to making such a claim. The claim has to be made under a limited company. It can be a normal UK onshore company. It can be a UK offshore company, something based in Jersey or the Isle of Man. It could even be an offshore company as long as they are UK taxpayers. Now, the second condition is that that company has to be undertaking qualifying research and development activities. As we've mentioned, those qualifying activities are open to interpretation. We'll come on to some examples later on. The final sort of stipulation and condition is that capital money has to have been spent on these activities. I think it's worth noting as well that the end product or process or whatever it might be does not necessarily have to be successful. So that's something to bear in mind and consider. I think it's more the means and the intention of innovation as opposed to the outcome. There's actually two schemes that the legislation sets out. I believe the majority of attendees here, if not all of them, the relevant scheme will be the SME scheme. As it was written on the slide there, what qualifies a limited company to make a R&D claim under the SME scheme is that there has to be less than 500 employees or staff, a turnover of less than £100 million, and gross assets of less than £86 million. The basic reason that there's two separate schemes is to provide a clear delineation from an SME, a normal company, and your huge kind of Pfizer and Bayern and massive drug companies, for which, of course, there's separate legislation, separate rules that they have to adhere to. So, as it's written on the slide now, a key question is, what is qualifying expenditure? What is counted as qualifying activities? So broadly, these will be separated into two categories. The first category will be items and expenditure that facilitate the R&D activities. So this might be things like materials, it might be computers, software, things like that. Second category is what's written up on the screen now. Staff expenses, that includes a salary, national insurance contributions. It might be consumables, so things like heating, electricity, things like that. Subcontractor and freelancer contracts and salaries can be claimed at a slightly different rate. And as we mentioned, software there again. I think that, again, the reason that we've separated them into two separate expenses is because they're claimed at different rates. So materials, for example, PCs, or even a building, let's say there's a laboratory, that can be claimed at 100% write down, so 100% of the cost in the year in which the activity was undertaken. Whereas things like staff salary, contract salaries, etc., can actually be claimed at 230%. So we'll get down to a bottom line outcome and benefit in a small while. Again, I just really want to stress the point that it's about taking a qualitative approach to all of this and understanding what the exact activities were. Again, an example might be that an employee might undertake 50% of their time doing normal activities that do not qualify for R&D, and 50% of the time undertaking activities that do qualify for R&D, in which case we time apportion the salary and the amount that we can actually claim. A key point of limitation here is the time limits. So the R&D claim must be made within the same chargeable period in which the expenditure has been undertaken. What that, of course, means from a practical perspective is that effectively you'll have 2 years from when you're undertaking the expenditure to actually make the claim, because of course HMRC give you a 12-month window in which they can make an inquiry on which you can make an adjustment to your accounts. However, if it's outside of that period, then the claim is lost forever. So I'd really encourage people that if they feel like they might be undertaking some form of activity or they'd like to look into that R&D side of things, there is a clear sort of time restriction here. Let's just finally kind of sort of look at the rates that I was talking about. So if we were to identify £100,000 worth of expenditure at your 100% rate, that would mean for a corporation taxpayer, it would mean a tax saving of £19,000. If you're in a profit-making scenario, if you're in a loss-making scenario, you can actually surrender your allowances at 14%, which means tax saving of £14,000. Now, of course, in all activities that qualify for a 230% R&D claim, on that same £100,000 worth of allowances, you're saving yourself around £43,000 if you're in a profit-making scenario, and closer to £32,000 if you're in a loss-making scenario and want to surrender the allowances. So just to bring things to life, a small example of a case that we've worked on recently. There was a manufacturer of health and fitness equipment that they needed to undertake some R&D activities for a commercial purpose. That purpose was that they found that a lot of the larger manufacturers of this equipment had actually they'd manipulated the tender system, whereby people actually had to innovate and bring a new product to the table in order to win the contract. So this company started to kind of undertake various research and development activities. We looked in, they engaged us, and we looked into their kind of sort of activities and found that 35 projects that we were working on at the time actually qualified for R&D allowances. A small example of which, there was a machine that was focused more on kind of sort of weight resistance exercises. It was actually an existing product from one of their competitors who had then taken that product outside of their portfolio. So our client then kind of sort of re-engineered the process to achieve the same outcome, but just in a different means, in a different way. And so, again, by taking a very thorough look at activities and seeing what really the revenue will accept as qualifying expenditure, we were able to speak with all the technical experts, look through their various accounts, and identify well over £1 million worth of qualifying expenditure. So I think the figures should show you that R&D claims can be very profitable, tax efficient for a company. And again, if anybody feels like they're undertaking those kind of activities or would like to kind of sort of make that inquiry, just contact Churchill, and we'll be happy to kind of look into it.
Okay, thank you, Barbara. That was very useful. Main professionals on specializing in R&D. And I'm sure there will be plenty of questions in the audience. You can send us a question now, or in 2 minutes. But if you've got any follow-up questions, you can send me an email, or you can send Hazel or call us, or contact Imad or Barbara. So we'll be more than happy to help you if you're looking at potentially any kind of claim on R&D. Even if you're not sure whether something qualifies or not, it doesn't cost to ask the question. We see situations where, Barbara's example is very good, that they hadn't been even asked about system operating or machines operating, but they qualified. So if it does qualify, then you can get some significant rebate, 230%. Which for some clients that we've dealt with has spent tens of thousands of pounds of refund. So it's worthwhile having. And that said, I think we're Barbara. One question I have for you is with pharmaceuticals. What is there? Do you apply different kind of measurement for pharmaceuticals? Somebody's trying to work on a new kind of drug or something, or somebody's been manufacturing drugs, the same kind of drugs, but they're making small variations to it. Is that something that you've dealt with before?
Oh yeah, absolutely. I think again, because R&D covers such a broad range. Where our expertise really come in is from our experience and case history across different sectors. So, as you rightly pointed out, the process for manufacturing plastic bottles is very different from the process of manufacturing, pharmaceuticals or drugs. A simple example might be that what qualifies for as qualifying expenditure in that kind of scenario, a pharmaceutical scenario, might be the salary for which you pay somebody for undertaking a clinical trial. Something like that will qualify for an R&D claim within pharmaceuticals, where of course in other manufacturing industries there might not be an equivalent. So I think really where we can add value is by having experience and case history in doing things like that. Again, the separation of constituent components and elements of drugs within the pharmaceutical manufacturing sector is very, very strict. There's a lot of costs associated to that, sometimes security costs, and sometimes costs related to inertia, making sure that certain elements don't mix or don't react with the environment. And so, yeah, look, each thing, again, has to be taken on a very bespoke and case-by-case basis. But, yeah, absolutely, the manufacturing of drugs, pharmaceuticals, things like that, again, even the buildings, what will often happen within the pharmaceutical industry is that a building might be purchased as a laboratory or a research facility. There might be a residential element to that, whereas in a manufacturing warehouse, there's no residential element. Again, on that building, you can take into consideration the purchase consideration and cost consideration of the acquisition of the building, minus the land costs and any residential dwellings or elements. Whereas, again, when you're manufacturing plastic bottles, it will tend just to be a kind of sort of fully commercial manufacturing facility. So, yeah, again, everything has to be very bespoke, has to be looked into detail. We need to provide a very robust explanation from where we're getting our figures and how we're coming up with these calculations. But yeah, absolutely, any form of manufacturing is ripe for an R&D claim.
One question I have just before we log off is CBDs that are becoming more popular, cannabis-based drugs. Is the UK government allowing for that? Because it's something a very new concept.
Well, as far as I see, they are. I had this conversation with a client very recently, and I felt like it was worth pointing out that I understand that one of the largest investors in cannabis-based products and production was actually our former Prime Minister Theresa May's husband. He made an investment a couple of years ago, so I'm sure that that is some form of indication that the UK is moving towards some form of kind of sort of legalization of the development of these products. And so, yeah, I know that in fact that they've given out a few licenses to one company in particular in West London. So, yeah, I think it's a matter of watch this space. And at the moment, yeah, people are developing the products. I think at the moment, most of the products are being developed abroad and coming over here and being white labeled. But look, unfortunately, we can't advise on the kind of sort of policy level at this moment in time. But yeah, absolutely, there's a lot of sort of changes happening, a lot of innovation taking place within that sector, and I know that a lot of clients are looking at it as well. So yeah, again, I'd say watch this space.
Well, I've got an interesting question from the audience on this. That's why I thought I'd put it to you, and maybe I'll get to speak to you about this later on. Right, excellent. Well, thank you, everybody. Thank you so much. And the recording will be sent out as well. If you've got any questions, get in contact. We'll be able to help. Thank you. We'll see you next month. Bye.